Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. I'll start with ice raw sugar in New York. Now, the formation of the double top over August to September is still the most significant feature in recent days. The rise up to, let's be honest, the somewhat suspect resistance of the upper time, currently at 2003, of December 2020 to April 2021 bullish shift picture, which was nevertheless ably backed up by the overhead congestion of the January to February 2017 move between 2010 and 2100, so that between the two of them they managed to cap the market and cause a double top. 3 weeks ago we started heading down the far side of this bearish pattern, moving down to the significant high from February at 1894, where we met the first support below the market. And that's 2 weeks ago. The rising short medium moving average, currently at 1893, came to the aid of this important high, halting the decline at a higher level early last week. However, today the market has penetrated this combined support and has been moving down to the next level of support, the middle time, and that's of the August based bearish Andrews Pitchell, currently at 1858. However, was really stopped short of testing down to this support, though the reversion back up, if there's any, seems to be limited, as we've held off so far by moving back up over the 1893 to 1894 level. It is worth remembering that this middle time support is in reality a bearish support, designed to slow the decline away from a too fast move lower and into an orderly move lower. Anyway, we still have a knot of congestion of business between roughly 1875 and 1780, made up from the July to August month end stroke start. Within this knot, we have the 21st century absolute fib at 1809, the rising medium moving average currently 1817, and soon the rising middle time currently at 1778 of the same bullish shift pitchfork. Now, the ammunition accumulated over August overhead does not really appear to be that much, or enough to break these, at least not just yet. This may go some way to explain why the dips have been, well, tentative, to say the least. Other than that, there have been no immediate patterns that have shown themselves to me at this time. Ice Europe white sugar. First off, I acknowledge that off the top of the daily chart we have the whole September 2020 today action as a huge bull flag with a potential topside target X2 in the 560 area. This is originally a very big ask of the market, but then as other targets have been achieved up here, notably targets X and X1, it seemed appropriate to keep this one in mind, just in case, at least for now. Anyway, the recent price rise seems to have petered out 2 weeks ago at the congestion from early 2017 in the 518 even area. Last week there has been a pullback up immediately after filling the change gap left between 496.5 and 501 even, but it was limited to well below the congestion of 518 area. Thus we come to what could be a seminal moment in this contract. Last Friday was a combined key reversal down and bearish engulfing pattern. I said it could be a seminal moment because today's move on lower has been somewhat disappointing, to say the least. Hence, it again raises the question, is the recent action, specifically last week, a hesitation, and does it revitalize the target X2 in the 560 area? In the meantime, I've drawn an early September action just in case. The nearest is the middle time, currently 501.70 of the bullish shift pitchfork, which has some form from early last week and again today. Below that we have last week's low and the lower time, currently 488.90 of the more acute bullish Andrews Pitchell. Just for information, these times cross on the 7th of October, and that's a date to watch out for. White premium spread. As I said many weeks ago, the key support here was and still is the middle time, currently at 33.75 of the big bearish May 2022 February 2021 Andrews Pitchfork. This pitchfork has been showing the bearish angle attack of this market, well, since February. As I said some 2+ months ago, and I quote, Please note this is a declining support, as is appropriate for a bearish pitchfork, so please do not think of it as any form of counter to the overall bearish incentive. That is currently evident here. Until we see the market move out of these strictures, then this bearish pitchfork will prevail. End of quote. Now, 2 weeks ago we had the first real attempt to move up and out of these strictures. The market formed a bullish opening long white Mariposa that punched up through the medium moving average, currently at 64 3/4, the upper time currently 68.5, the neckline currently at 75 1/4 of the 2020 head and shoulders top, and even the long moving average currently at 77 even. However, and it is an important however, the market failed to close over any of them bar the medium moving average. That doesn't mean that is the end of the bullish attempts higher. However, we also had last week what looks like week 2 in a 2-week descending hawk pattern. Now, this is usually seen as a bearish reversal pattern, but we've failed this week so far to move lower. Admittedly, it's only day 1 of this week, but we are already challenging the upper time again today. This is because the descending hawk pattern, whilst still being a 2-day or 2-week pattern in this case, is in the least aggressive Harami family of patterns. Consequently, caution is advised. I suppose it all depends if prices press down through 63 3/4 or not. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.